My next guest knows both the commercial and residential pieces of the market well. He is Don Peebles, the founder, chairman, and CEO of real estate developer the Peebles Corp. He has a multi-billion-dollar portfolio of projects in many major metro areas, including New York, Miami, and Los Angeles. Don, welcome. And before I get into all of this, Miami, I mean, this is Bitcoin Miami. Everybody's talking about Miami. Don Peebles is talking about Miami. So in many ways, is this a regional story of strength right now?
Yeah, I mean, Miami has been an emerging city for quite some time, and it has benefited significantly from the fallout of COVID and the relocation outside of New York and other areas around the country, including Los Angeles and San Francisco, where high net worth individuals and entrepreneurs and companies are fleeing to a tax-friendly state, a business-friendly state. And so Florida, especially Miami and Palm Beach, are benefiting significantly.
Your real estate exposure on the residential side is really more to the high-end markets. We talked about Miami, but whether it's Palm Beach, Dallas, Fort Worth, Austin, areas of Florida, would you say that your residential consumer is in very good shape, somewhat good shape, and what's going on with the market dynamics as mortgage rates spike?
I mean, it's interesting. I think that the more moderate home market is going to continue to endure because it's so supply constrained and there's pent up demand. I think the luxury, kind of that moderate luxury up to say $3 to $5 million is going to get hit hard. I think anything say $10 million and down in New York is going to be hit harder as interest rates rise because the buyers are more interest rate sensitive to those, and low interest rates have given buyers a tremendous buying power. However, I think that the high end of the marketplace in business-friendly environments is going to continue to do well. And for some reason, Los Angeles has endured exceptionally well on the ultra high-end side. I mean, they're setting record price after record price for single-family homes, and there doesn't seem to be an end in sight for the high-end, ultra luxury homes. And I think that's because their industry is driven, by different stimulus.
It's so interesting. One final question on the residential side. I just want to ask you quickly about offices after that. But where do you think we're going to be a year from now in the residential market in terms of prices, in terms of activity, in terms of inventory?
I think that Miami will continue to experience significant appreciation because supply constraints. The market wasn't ready for this type of demand. I think New York will hold its own overall on the residential side because it's supply constrained. But I think we'll start seeing some more development. I think we'll see it in places like Boston, Charlotte. I think you'll see Los Angeles, downtown LA pick back up for a number of different reasons. But I think that there's a very positive side. I think the single family rental market to scale, I think, has got some headwinds ahead of it, mainly because the residents in those communities are beginning to push back. They don't want rental homes in, traditionally homeowner communities. And so you'll see more pushback on that, and there'll be more regulation coming.